Welcome to this installment of Clarifying Tax Situations with attorney and CPA David W. Crossing.
What are the cryptocurrency FBAR and FATCA reporting obligations? If you've been living outside the United States and you kept your Bitcoin wallet outside the United States, or your cryptocurrency wallet outside the United States, or you've been engaging with transactions with offshore brokerages, coin brokerages, you could wind up facing a problem with non-reporting of the foreign account. At this point in time, it's not even exactly clear whether an offshore wallet or an offshore coin brokerage will result in an FBAR reporting. What's an FBAR? FBAR stands for Foreign Bank Account Reporting. And eventually, this definition is expanded to almost any type of financial account offshore, an investment account, all right? Back in 2014, there's only been one time where the government was approached and asked if they had to do an FBAR filing related to offshore wallets and offshore investments in cryptocurrency. And the answer was, well, at least for 2014, we're not requiring that information. There is absolutely no guidance for 15, 16, and now 17. What I tell my clients is this: there are no penalties for disclosing something you're not required to disclose on an FBAR. Unfortunately, if the government comes on later on and says, well, you should have disclosed that, there are penalties. What are the penalties? If they think you just were negligent, it's almost strict liability, there's a $10,000 penalty for not doing that form per year, okay? If they believe you were willful in not disclosing that foreign account, they can come after you for 50% of the high water mark of that foreign account over the year. So if for the entire year you had $1,000 in an account and then it went to $1 million, 50% of $1 million, even if it was $1 million for 2 seconds, okay? And frankly, it creates problems with how you fix it, okay? If you have these complications to your fact pattern, a domestic voluntary disclosure may not be enough. At this point in time, when I'm making this video, this issue is not clear. It may become clear in the future, but as of right now, nobody in the nation really has a clear idea on this. I'm hoping somebody at the IRS sees this and gives us some clarity, okay? If you have to do a domestic voluntary disclosure, it's no longer just about doing 5 years amended returns, picking up the tax you should have paid in the first place, paying a 20% negligence penalty, paying interest back to the original filing dates of the returns. Now the government may want up to 27.5% of the value of the cryptocurrency that was offshore in the wallet or offshore in the foreign brokerage. 27.5% of the high water mark over an 8-year period of time, okay? An offshore voluntary disclosure is for 8 years, not 5 years. 8 years amended returns, 8 years of FBARs, 8-year period to assess an FBAR penalty on the high water mark of the total of all of the foreign accounts. If you have 20 of them, you add them all together, and on a daily basis over 8 years, which day had the highest balance in it, take that times 27.5%. That can be astronomical. The IRS has shown increasing ability to get at offshore financial institutions to get information. They went to the UBS and they got information on US account holders. Matter of fact, almost every bank in Switzerland has turned over information. They've gotten information from governments. I had a client where the US government went to the Indian government and said, give me all this information on offshore investments of this particular person, and sure enough, the government of India gave it to the US government, okay? As time goes on, I think the government is going to take the battle against cryptocurrency offshore. Unfortunately, when we talk about cryptocurrency, there is a lot of uncertainty over a lot of issues. To be honest with you, the government's done a horrible job to date of providing guidance. The last time we got guidance was 2014. We're now in 2017. Questions are being asked all the time because the government is so short on resources, they're not providing answers. That leaves guys like me and your tax professional, whoever you're going to deal with, kind of guessing. But I like to be conservative. I like to take positions that are not going to turn around and bite my client or myself or hurt my errors and emissions insurance. One of the things we need to talk about are, What are the cryptocurrency FBAR and FATCA reporting obligations? Is it necessary to report for FATCA? Is it necessary to report for FBAR purposes? Well, let's start with this basic question. What do virtual currencies have to do with foreign accounts and taxes? Well, let's start by looking at a wallet. Okay, there's some confusion here. Users of cryptocurrency can either print out their full or their partial Bitcoin keys, if you will. All right, these are the special numbers that give them access to the coin that's carried on the blockchain ledger. They can carry that around in paper. All right, if they print out all these keys, if you will, and put them in their pocket and hop on a plane to Switzerland, does that mean they've got an offshore account because the keys to the cryptocurrency ledger are with them? Well, when you think about the cryptocurrency ledger itself, where is that? Where's the blockchain ledger at? Well, it's dispersed. It's all over the internet. It is in every country, in every corner of the world. So really, is it all foreign? Is it all domestic? We have no guidance at this point in time. So it's an open issue, left open to interpretation. Now look at it this way. You can carry around all of these keys electronically. How about in a flash drive, in a phone, in a laptop computer, on a hard drive, in the cloud, all right? Then the question becomes, where's that cloud located? The company that owns the server that your stuff is on is in Zimbabwe, but the server's in the United States. Does that make that foreign? These are all hair-splitting arguments that are going to be interesting to see how they resolve, okay? We need guidance. The next thing is this, okay, let's say you download, matter of fact, I had this happen once. I had a client put a flash drive in front of me. It was a specially designed flash drive to carry around cryptocurrency keys on it, okay? Literally, he put it on my desk and he told me what the value of that was. And anyways, it was just mind-boggling how much money was on this flash drive. Well, a flash drive, a phone, a laptop, what happens if somebody travels offshore and they take that with them? Does that create a foreign bank account reporting? What if they were only offshore for 10 minutes? They went to Mexico, they had a soda, and they came back. Does that create an FBAR reporting? We need guidance. These are open questions. I don't really even have the answers for you, all right? To make things even more complicated, the location of this electronic wallet can be determined by the location of the hardware, okay, the hard drive, the phone, the flash drive, or it can be determined by the brokerage that the client is doing business with. Well, it seems to me it becomes a little bit more clear. If they're dealing with an offshore brokerage, that already kind of raises offshore compliance issues. And if the keys are kept with that brokerage that's offshore, you know, it starts to lean towards disclosing. I still can't tell you whether that's right or wrong, but I can tell you this. If you disclose and you weren't required to, there's no penalties for that. But if you don't disclose and it turns out you were required to, you could face civil and possibly even criminal penalties. The distinction I just mentioned is important because when we look at hard currency, when we look at real estate, when we look at precious metals, if we look at personal property that's held directly by somebody, certain covered benefit programs, these are not reportable for purposes of the FBAR or FATCA. We could possibly argue in that way. But look at this. Once these very assets, okay, where they have given guidance, precious metals, for example, if you take precious metals and you put them in a lockbox, a security box, and you stick that with a foreign institution, all of a sudden that becomes reportable on the FBAR, okay? Once these assets are placed in a foreign financial account, they become reportable for purposes of the FBAR and FATCA. I think by analogy, you could say the same thing applies to cryptocurrency. The bottom line here is some users of Bitcoin, for an example, can place the value of their Bitcoin in an account that may be held overseas, or they can store it, trade it with a foreign exchange. To me, this seems to be an area of some concern.